Hello traders and welcome. I'm Tamar, Mehr, FXGlobe ambassador, and this is FXGlobe Masterclass series. Today's Masterclass is about gains and losses. Do we treat them as equal? Let me start with a theoretical question. Imagine that you just lost $1,000. How do you feel? Now imagine that you've just won $1,000. How do you feel now? Does the feeling of losing $1,000 completely disappear after the feeling of gaining $1,000? Do the feelings even out? Do you feel like you are back at the same place as you started? Not dollar value wise, but rather thought and attitude wise. In reality, most people will feel more strongly when it comes to losses than to wins. And in actual effect, most people will do more to avoid the pain of loss than to enjoy the pleasure of gains. In other words, most people will find themselves feeling worse in the above example of losing $1,000 and then gaining $1,000. Our feelings and emotions in regard to losses and gains do not balance out, even though the value of dollar lost versus dollar gained did balance out. This is the essence of the prospect theory, a theory in behavioral economics and finance that was developed by Daniel Kahneman and Amos Tversky in 1979. So why is it so important for traders to know and understand this concept? Well, think about a trader scorecard. It will always have losing trades on it. No matter how experienced a trader is, no matter how successful a trader is, losing trades are a part of trading. The market works in probabilities, and there is no 100% winning trading strategy or any automated script that only wins. It just doesn't exist. Every moment in the market is unique, and a trader's job is to find high probability patterns that more often than not will go to target rather than to stop. We will cover the effect of probabilities on a trader's scorecard and mindset in a follow-up masterclass. But for now, we should understand that as the market works in probabilities, our setup, therefore, are just high probability rather than a guaranteed outcome. Then we need to work on the effect of losses on our trading mindset and get an understanding that as human beings, we are pre-programmed and therefore we will do more to avoid the feeling of loss than what we would do to gain pleasure. This can go a long way to explain the fear new traders have in executing a position and why so many times an inexperienced trader will find themselves watching the market move but unable to take action and even feel paralyzed at times. Let's think about the following scenario. Think about a time where you had a losing trade followed by a winning trade. How did you mentally react to the losing trade? And how did you behave and react to the winning trade? Did you let the trade run to target? Or did you interfere with it and got out too early, fearing of another loss? Were you still reliving the loss when you jumped out for a small profit? Now let's flip the order. Think about a time where you had a winning trade followed by a losing trade. How did you mentally react to the winning trade, and how did you behave and react to the losing trade? Did you let the trade run its course and hit your stop? And did you interfere with it and kept on moving the stop loss further and further away in the hope that the market will reverse the direction and move in your favor, creating an even bigger loss than originally planned? Our human fallacies can work against us when making trading decisions. So next time you trade, jot down how you feel and let's make sure we are reacting to losses and gains in a more equal approach. Happy trading, everyone!